Ladies and gentlemen, good day and welcome to the Talbros Automotive Components Limited Q2FY22 Earnings Conference Call. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectation of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now like to hand the conference over to Mr. Anuj Talwar, Joint Managing Director of Talbros Automotive Components Limited. Thank you, and over to you, Mr. Talwar.
Yeah, thank you so much. Good afternoon, everyone. A very warm welcome to our Q2 and a half yearly FY22 earnings call. I hope you all are staying safe and healthy and had a good festive month behind us. On the call today, I'm joined by Mr. Naveen Juneja, our Director on the Board of Talbros and our Group CFO. SGA, our Investor Relations Advisors, joining us from Mumbai. The results and the presentation are uploaded on the stock exchange and the company website. I hope everyone has had a chance to look at it. Before I start with the industry overview, I'd like to share with you that we all have done our bit to protect ourselves and the community by fully vaccinating our Talbros family. This ensures at least smooth working and people come into the office hours and also traveling out to get their work done. I'll begin with the industry and the economy overview. Our government has taken massive vaccination drive across the country. With over 100 crore plus people vaccinated in India, it brings confidence to get back to some normalcy. Rural India witnessed positive sentiments due to a normal monsoon. The festive season typically accounts for about 40% of the annual vehicle sales. But you've seen today on the front page of Economic Times as well that this festive season did not bring much cheer to the motown. However, we at Talbros still were able to beat the industry. You all have been reading in the papers about the semiconductor shortage, the supply constraints, the fuel price hikes, increase in input costs, metal prices, commodity prices. So it's been a little bit of a tough and a challenging quarter for us, but we have managed to sail through and if not do better. There was some relief this morning about a cut on some excise on fuel for about 4 to 5 months. Hopefully that will bring some cheer to the automotive industry. A quick update without going into too much detail. To the surprise, in Q2 actually, the automotive industry declined by 3.37%. Passenger vehicles grew at about 4.17% for the Q2. CV segment grew at about 25%, given the low base even in last quarter of last year. Two-wheelers declined by 6.19% and still look to be a bit muted, even with the festive season. Exports have done well generally. I'd like to highlight a bit about Talbros, what we have achieved, and also like to share with you a strategy going forward. Our business is broadly divided into a standalone business, gaskets and forgings, and our 3 joint ventures with global auto comp leaders for gaskets, for suspension, chassis, and anti-vibration rubber components. We've always maintained that Talbros is a very hedged auto comp player We supply across various platforms and in different markets globally. During H1 FY22, our domestic sales, of our total domestic sales, 30% came from 2 and 3 wheelers, 27% came from passenger vehicles, 28% came from commercial vehicles, 10% came from the agri segment. This is something that we've been talking about for our various conference calls and investor calls, that we maintain to be a hedge company with not one customer being more than 10 to 11% of our turnover. Our export portfolio did well in H1. 27% of our revenue came from exports in H1 FY22. Our forging business achieved 53% revenue from the export market, which continues to be an outlier within our group. We remain focused to achieve an export percentage of 28 to 30% in the coming years. Talbros is diversifying it at pace with the market requirements. We are now supplying critical components such as suspension, chassis and forgings to electric vehicle space, both in India and globally. We ensure to capture market share both in domestic OEMs and global OEMs, and also been pushing very, very hard with the OE spares market in our country. I'd like to discuss a bit about our standalone business, gaskets and forgings. We still continue to hold a 50% market share along with the joint venture Nippon Beakless in the gaskets industry in our country. We have already successfully, as mentioned earlier to you, implemented BS6 product line, which will increase our value-added components pricing per engine. This also helps you go to the export market, as you are now a BS6 or a Euro 6 qualified component maker. Going forward, talking about the heat shield product line, which is the future for PV vehicles, made of aluminium. It's for lightweighting, it's for noise reduction, it's for weight reduction, it's for heat reduction. And this product will start in the domestic market with the top car makers of the country, maybe Q4 or latest Q1 of next year, depending on testing and validations. The product, which is called Nimbus, is a patent of our joint venture partner, TA partner in Japan. It's basically for lightweighting of products and engines. The forging division has continued to perform well both in the domestic and the export market. With more than 50% share coming from exports, this is quite a achievement given that we are an outlier, given that we supply about 28% overall. Our focus in forging is to move to value-added products, heavier weight components, machine components, although we already machine about 99% of the products that we supply, but we're getting traction now from our existing customers to supply them heavier parts as well. As mentioned to you earlier, we're already supplying to EV platforms from our forging business into Europe. Coming to our joint ventures, Marelli is a 50-50 joint venture between Marelli and the Stellantis Group, ex-Fiat, to make complete chassis and suspension components in India. Even in this division now, exports are about 11%, could have been a bit higher, but some of our European car makers are facing a semiconductor shortage, and that's causing a bit of a slowdown. On the other hand, I'm very proud to say that not only are we supplying to Maruti, But with our new Pune plant, we're supplying to all these Tata Motors models that you see, EV and non-EV, which are getting a lot of traction in the market. We're pretty much a very aggressive penetration with Tata Motors for their suspension components. Coming to Talbros Marugu, this joint venture is coming along. It's got an immense potential, and we always maintained earlier. But again, given the huge semiconductor shortage and a dependence on Maruti, this is lacking behind a bit, but it'll come through. We are working on our strategy to go for more exports, talking to JV partners in Japan, sending more products into Japan, working with some of the OEMs in the USA to increase our customer base in this product line. Here again, testing, validation, and the kind of product it is, it takes time. Before I hand over the call to Mr. Juneja, who will walk you through all the numbers, all I can say is that we managed Q2 well with a hedge strategy and focus on exports and with very tight operational controls to give you the margins that we could. Over to Naveen, please.
Thank you, Anush. Good afternoon and a warm welcome to all the participants. Let me begin with the financial review. In the gasket, including Nippon Leakless Talbros, for Q2FY22, our standalone gasket sales was 91 crores as against 68 crores in Q2 of FY21. Total revenue of Nippon Leakless was at 23 crores in Q2 of FY22 as compared to 28 crores of Q2 of FY21. This drop in sale is due to a reduction on the sale prices as we have introduced a local gasket made of local material as against imported material. The price of this gasket is 36 versus the imported gasket price was 46 rupees, but our margins are much better in this local indigenized material gasket. This is the reason for drop in revenue. This segment saw a combined EBITDA of 18 crores in Q2 of FY22. Now coming to forging division, the forging business is consistently performing well. The revenue in Q2 of FY22 is 55 crores as against 43 crores in Q2 of FY21. Coming to Maruti Chassis System Private Limited, the total income for Q2 of FY22 stood at 40 crores versus 32 crores in Q2 of FY21. Talbros Marugu, total revenue from operations for Q2 FY22 stands at 12 crores vis-a-vis rupees 11 crores in Q2 of FY21. There is not much growth in this business because of, as you are aware, in the last quarter, the Maruti business was down by 30 to 40% due to semiconductor issues. At this company, dependence is approximately 70 to 80% is on Maruti. Above mentioned revenue numbers of all the joint ventures business are total revenue, including our share of business. Now coming to the consolidated financial performance of the company. On our slide number 12 of the investor presentation, we have reported consolidated revenue based on Ind AS, which doesn't include the share of our JVs. Total income, including other income, stood at 146 crores in Q2 of FY22 as against 110 crores in Q2 of FY21, a growth of 32%. On a half-yearly basis, revenue stood at 285 crores versus rupees 161 crores in H1 of FY21. The financials for the period reflect strong business performance. Execution of multi-year orders received in the past years and additional count of EV product lines goes well in expanding our order book. EBITDA, including other income, stood at 20 crores in Q2 of FY22 as against 17 crores in Q2 of FY21. On a half-yearly basis, EBITDA stood at 40 crores versus 19 crores in H1 of FY21. EBITDA margin stood at 14% for the quarter. Majority of our commodity prices increase for the past 2 quarters were recovered during Q2, which has helped in adding the margins. While reversal of salary reduction which had taken place in the previous year, and increments of average of 10% in the current financial year has increased our employee expenses. PAT stood at 11 crores in Q2 of FY22 as compared to 10 crores of Q2 FY21. On a half-yearly basis, PAT stood at 21 crores versus rupees 1 crore in H1 of FY21. Gross debt at the end of 30th September 21, including working capital, stood at 101 crore. For the quarter, we incurred capex of approximately 12.65 crores. We continue to witness strong momentum and benefits of our hedge portfolio, and accordingly we foresee highest ever probability for Talbros in FY22. This is all from our side, and I would now like to open the floor to questions and answers. Thank you.
Can we open the call for a Q&A session now? Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Jain from Arihant Capital. Please go ahead.
Thank you, sir, and thank you for taking my questions. Sir, can you throw some light on your EV side of the business, how Merrily JV is doing, and what kind of opportunity or revenue we foresee for the EV side of the business going forward? And also on the forging side, if you can throw some light how the EV side of business is picking up right now.
Yeah, now coming to your question, let's start with Merrily. Merrily has already got the orders from Tata Motors for all their vehicles, which includes the EV vehicles, and we are the single source there. The more the EV sales goes there, we are there in that business. On the export front, in JLR, we have got the entry into all the vehicles which are under the new platform, which are EV platform, which is coming from next financial year, I hope so. So we are there in that business, and whatever the turnover will be there, we will be part of that. Exact amount I'm not able to comment on as of today because we are not aware of the future numbers they are projecting. But my suspension is there in their business, and we are part of that EV business. Whatever the EV production will be there, we will be part of that business. Now coming to forging division is supplying to BMW a lot of components plus fresh component we also received for the EV vehicles. I foresee for that next financial year the BMW business will be 20 to 30 crore will be in the EV. Now we have also a part of GKN, we supply to Volvo EV vehicles, and we are part of that business, and that business is approximately 20 crores in this financial year. Going forward, of course, it's going to go up. Thirdly, we also approved by JLR, and we are supplying components to JLR for the EV business from a forging division also. At present, JLR sales is a little low. So the revenue of that business will be approximately 7 to 8 crore in this financial year, which is expected to go to 18-20 crore next financial year. This is
okay. And can we see 1,000 crore revenue in next 3 years?
Of course, we are working on that. 24-25, we are working on that.
And sir, on the EV, what percentage of revenue from the EV side of the business?
We are targeting approximately 20% revenue from the EV. 15 to 20% we are targeting. And
last question, sir, if you can throw some light on the margin side also. What will be the sustainable?
On between 14 to 15% anywhere, somewhere.
Okay, sir. Thank you, sir. Thanks, sir.
Thank you. The next question is from the line of Shikha Mehta from Equity Capital. Please go ahead.
Good afternoon, sir. Congratulations on the amazing set of numbers. So, give us some light on this conductor issue. Is it easy to
your voice is not, your voice is not, is breaking. Sorry for that.
Ma'am, may I please request you to use the handset mode while speaking?
Hello. Am I audible?
Yes, you may go ahead, ma'am.
Yeah. So could you give us some... Right, yeah.
Basically, when we talk to our OEMs, both domestic and globally, some OEMs say 3 months, some say 6 months, some say 9 months. So what these OEMs are doing is they're rejigging their product portfolio. So they're changing, like for example, Maruti, for example, if it has for a particular model, it'll produce that model on the line for the next 5-7 days. So it's very fluid right now. No one really has an answer, but we are hoping that we are also in commercial vehicles which are not that badly affected by this shortage. So that should pick up in the coming quarters. So no one really has an answer. Like this month, the way Maruti has given a very good guidance. Let's wait for December. But 3 to 6 months is going to be fluid. No one really has an answer.
Right. And so on the
whatever we budgeted, whatever we're looking at, top line, bottom line, we're still working with that. We're working on, you don't stop. You start working on the aftermarket, replacement market, OE spares market, export market. You try and push some, you try and push into commercial vehicles. So we'll find a solution.
Right. And so if you could also give some guidance on the logistics cost, are we seeing it coming down a bit now, or is it still high?
No, ma'am, it's not coming down. During the last 1 year, logistic cost, container cost and freight has gone up export by 300%. Of course, we have taken a brunt in our books to some extent, and what we are able to recover from, I think, 80% of the customers, approximately 75% of that cost, not 100%. But 2 customers, we are still fighting with them. Let's see. But it's not coming down at present.
Okay. And so could you give me the capacity utilization for the half year and for the quarter in all our divisions?
Yeah, I will give you for the half year. I can give you the capacity utilization. Just a moment. Just a second. I will just give you. It's approximately, if we talk about the gasket, just a minute. Yeah, it's 82% in gasket. Okay, in forging is 78%. In Melee it's 75%. In nipple leakless is 65%. And tunnel Margo in 95% division is 75%. In hose is 35%.
Okay.
Okay.
Thank you, sir.
Thank you.
Thank you. The next question is from the line of Vaibhav Shah from Atharva Well. Please go ahead.
Hello.
Yeah.
Thank you for giving an opportunity. I have a couple of questions. My first question is, what kind of capex will be required to cover your EV market products?
So, no, our products, whichever are there, will fit into EV. So suspension will be fit in the EV vehicle also. So no major capex is required for that.
Okay. And we are at present we are getting more inquiries from domestic market or from the global market?
Both.
So in the domestic market, you are getting requests from all the major OEMs, Tata Motors and all those people.
We already supplying to them. So
okay.
Tata is the leader out here, if I would say the number of vehicles they come up with, and global also we're getting the inquiries. Like Naveen mentioned to you that, certain global OEMs will only make electric vehicle platform vehicles after 23, 24. But that's hybrid, plug-in hybrid and EV. So the future RFQs, that is request for quote for our divisions is coming from those passenger vehicles coming from EV only.
Okay.
For a forging division, for a rubber division,
Mm-hmm. Okay.
In EV, we are getting major traction from export customers.
Oh, export customers also you're getting good traction there.
Yeah, BMW, we are making some bushes and some parts we have started making for the EV vehicles already. JLR, we are part of that EV platform, and we're getting whatever it picks up, it will pick up. Volvo is through GKN, we are supplying EV components.
Okay, that's a good, sir. So my next question is, as you target to increase your export mix, how much distributed it, I mean, it will be, how much it will be distributed, it will be amongst all the segment between the JV. So, can you provide the breakup, export breakup on each segment and each JV currently in that sense?
Yeah, I will give you the breakup of that also.
Overall is 27%.
Yeah, I will give you the breakup. I have the breakup with me. Just a second, I will get the breakup of that. Yeah, so the group. Is in the group? Yeah, I have to call the breakup also with me somewhere. Just a minute.
See, gasket used to be 12% 2 to 3 years back. Now it is touching 18%. Forging is 53%. Chassis is 12%. Rubber is about 4-5%.
Yeah, now I give the exact breakup of that. In gasket 17%, forging 53%, nipple necklace 0, magnetic 11%, Margo rubber 15%, overall 27%.
Okay, okay. That's all from my end. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Sir, we have consistently had a very low ROE and ROCE from many years. So do you feel that this is a function of the kind of business that we are in, or is there some ways we can improve the ROCE and ROE? That's one. And secondly, sir, how do you feel that this exports market could pan out? Because with India having a good domestic supply of iron and steel, and in most other countries, the steel itself could be very expensive. Do you see that the demand for our products would really go up on the cost differential alone?
Sir, first you are talking about, because the voice is not clear today, I don't know why.
Should I repeat my question, sir?
Yeah, first you are questioning ROC and ROE, no?
Yes, sir, yes.
We have improved. I think first of all, I am pleased to inform that in this current financial year, H2, during the first 6 months, our margins have gone up very, very, I think, higher. If I talk about the ratios, and my key ratios, if I talk about, just a minute, all the papers with us.
So the ROC?
Yeah, ROC, yeah. If I ROE of the first 6 months is 16.4%, as opposed to last year of 10.5%. ROE has gone up to 18.9%. ROC, as opposed to 14.1% of last financial year. The major reason for this is all the BS6 products. My prices are much higher, better. My margins are much better as compared to BS3 and BS4 products. Number one, my export business is going up continuously as compared to last year. It was used to be 23-24%. Now it is 27% as a whole, as a group. On standalone basis, it's about 28%. So these two things has helped us to reach our margin, and going forward, all this more the BS6 products will be consumed by the customers and by my OE customers. My margin will keep on growing on this. And the good part is I am able to recover the majority of price increases, but still something is left, which we hopeful to recover in next quarter, definitely. Yeah. Hello? Any other question? Hello?
Mr. Faisal Hawa, your line is still unmuted. Do you have any further questions? Looks like no response from the current participant. Before we take the next question, a reminder to the participants, if you have a question, please press star, then 1 on your touchtone telephone. The next question is from the line of Aditi Sawant from ADM Advisors. Please go ahead.
Hello. Yeah, thank you so much for the opportunity and congratulations on good set of numbers. So I have a couple of questions. First is, what kind of future expansion will look like at Talbros? And second is, on the financial front, at this run rate, what kind of profits are we looking at for FY22?
First question is regarding the expansion plans. Of course, we have an expansion plan in all our divisions. First, to talk about gasket, we have an expansion plan for our heat shield business. We are setting up a heat shield line. Plus, next year we will buy our Nimbus machine going forward, which can take care of up to 50 crores of my sales in heat shield business alone. Plus, we are expanding our gasket facilities also because of the new harness gasket. Plus, we are getting very good export from USA. Orders we are getting from that. For that, we will be expanding our facilities. And our plan till 24-25 is to invest another 33 crores in the gasket business alone, and which will take our top line to approximately 500. We are targeting by 24-25. On the forging front, we are also expanding. This year, we are already invested 7-8 crores in our machining facility. Plus, we are expanding. We're putting up a new shed for our in the approximate 30,000 square feet in our forging facility. Plus, after that, we will be adding more machines. In that, our target is to take the turnover in next 3 years to 350 crores minimum in this business. And this is on the standalone business. Second question was FY22. Of course, you can see that we are targeting a minimum EPS of 30 rupees in this current financial year. If everything goes well, we will be able to achieve that.
Okay, yeah, that was helpful. And sir, next question is on the product portfolio side. So is our product portfolio of export is different than what we supply to Indian OEMs? So basically what I'm trying to understand is it better margin which tempts us to diversify more towards export business, or apart from forex rate advantage, which factors lead to better margins in export business than for domestic businesses?
So are you aware, domestic, all customers, nobody will give you a EBITDA margin of more than 10-12%. In OEMs, especially Indian OEMs. They will go into deep dive everything, and they are aware what's happening. They will give us the quotes from here and there. My EBITDA margin is around 12% as max in our domestic business. But in export business, quality of orders, timely delivery, plus they don't change their customers again and again. The group relationship is also there with them. So, and they compare the prices with the local supplier, etc. There Indian auto component manufacturer has an advantage. So we get a decent 18% EBITDA from there, 15 to 18%, depending on customer to customer. But again, there is some risk also. And when the price increase goes up, we don't get in time. We get after 2 months. Freight increases, of course, they will not give us immediately. We have to wait. Plus, recently, government also reduced their export benefit, which we used to get auto component by 2%. So these are challenges also there. But overall, margins are better there. But they have a capacity to pick the huge numbers also, like BMW, etc. They talk big numbers.
Yeah, I would also like to add that, if you're just constrained to the domestic market, then you're only constrained to the growth plans here. So, for example, what we've seen that the festive season has not really taken a big offtake in demand of two-wheelers or PVs. If you're just domestic oriented, you don't have that extra advantage. So this is a strategy that we started about 5 to 7 years back, where exports used to be only about 10-11%. And now they're up to 27-28%. God willing, if everything gets better, we're going to aim a bit higher on this front as well.
Okay. That was helpful, sir. Thank you so much, and all the best for the upcoming quarter.
Thank you.
Thank you. The next question is from the line of Rupesh Tatia from Intelsense Capital. Please go ahead.
Thank you. Thank you for the opportunity, sir, and congratulations on very good set of numbers. My first question is, sir, I am a little bit new to the company, sir, so please, some of the questions might be very basic. My first question is, can you please give some view on the competitive landscape in, all your 2 divisions in domestic market and 3 JV? And the broader context there is that some of the things are very interesting when I look at it, that you have 40% market share in gaskets, 53% revenue of forging is into exports. There are some new EV-related products in our JV. So in general, if you can, just give some feel about competitive landscape, and maybe if you can name one or two competitors in each of the segments.
Your query is, sorry, the line is not clear today. Yeah, you got it. Okay.
So basically, if you look at it, 50% of our turnover comes from gaskets. Now, in gaskets, we are the largest. Along with our joint venture,
Yeah, 50%.
we are about 50% of the country. Now, having established well the BS6 product line, which took years to validate, we are now going export with this. Our gasket export used to be 10%, now it's about 18%, 17-18%. Coming to forging, we did a very conscious call when we set up the line in Babel, which is North India. We realized that there's no point being only domestic because of margin pressure. We immediately started focus on exports, and here our exports are about 53%. The whole financial year also should end up at about 50 and 52.
Yeah.
Now,
I got the numbers, sir. I'm asking from competition point of view.
it's a huge competitive landscape. Huge. I mean,
what are our advantages? Can you just tell one or two things that makes us have this high market share or have good opportunities in export?
No, you want to know the competitive competition in gaskets and forging in the country?
Yes, yes.
So there are smaller players in gaskets. They're not that large. There's Banco, which does mainly radiators, but they have a small 100 crore business doing gaskets. There's a company called Shankar Sealing, which is a private limited company in the south, maybe about another 100 crores plus. Forging, I don't think we can put competition. I mean, our aspiration would be to be a Ramakrishna tomorrow morning to that scale. There are many players in forging. You got local forgers in Ludhiana. You got some established players like Ramakrishna. You got Bharat Forge is the next level altogether.
Forging.
Mahindra Forgings. So forging really can't depend on competition per se. There is more aspiration. In Marelli, the competition would be Sonasonic and SKH Metals. And in rubber, there would be BL Auto, Boni, and Yamashita.
Okay. Thank you so much for that, sir. The second question is, in general, auto industry works on very long cycles, right? The gestation periods and to time to win contracts is really large. So can you talk about your R&D? Can you give some idea about the funnel in your R&D in terms of new products or some projects you are working with your customers? Can you give some color on that?
For example, let's say the customer had a problem. Our largest OEM buyer is Cummins. Now he had to transition from BS4 to BS6. So they had to put up a new product, which is called it's called the integrated wire harness gasket. It's a totally new product. It's metal, it is rubber, it is plastic, it is wire harness. He was importing this. So he came to us, okay, fine, let's work together to make sure we don't import this anymore and we'll give you the business. So it took us about 2 years plus to get this product validated. So our R&D team actually files patents in the government of India, and there are several patents out there. Because gasket is a very high proprietary product because it is for the engine, and these two are for the commercial vehicle engines globally. So it took about 2 years plus. In export business, with our big OEM customers, it takes about 2 to 2.5 years from the inception date of the project to get it validated. In the heat shield space, it takes about 15 months. Forging 6 months, chassis 6 months. Rubber 6 to 9 months.
Okay. So roughly, sir, can we say that your R&D projects are growing at 15% kind of which will give us new revenue in future 3 to 5 years?
It's there. About 20% plus we add new business every year. That's in the pipeline. Approximately.
Okay. That is good to know, sir. And if I can squeeze one last question, sir. This EV disruption is on the horizon. So do you think our company will kind of manage soft landing without getting a lot of hit on either P&L or balance sheet in let's say next 5 years?
Okay, we already started supplying to EVs. We're supplying to EVs in India as well as globally. There is a bit of a little bit of a question mark on the two-wheeler segment today in the country with all this disruption with the Olas and the Ubers, Ola and Ather Energy. So we are there also in two-wheelers and gaskets. So maybe there's a 5-10% of only the two-wheeler business. So it's not too much for us. We are well aware of it. We're going to work with all spectrums, all energy platforms, both in India and globally. Be it hydrogen, be it IC engine, be it EV, will be a part of the whole supply chain. We are not too bothered about it, no.
Okay. Thank you so much for answering my questions. Thank you.
Thank you. The next question is from the line of Ravdeep Singh from Malabar Investment. Please go ahead.
Hi, sir. Great to
Mr.
see the
Ravdeep.
numbers. Hello.
Mr. Singh, I would please request you to speak a bit louder. Your audio is not clearly audible.
Okay, just give me 1 second then. Give me a second, please. Is this better?
Yes, sir, you may please go ahead.
Right. So, first of all, congratulations on the great numbers. These are genuinely, really good to see despite the RM cost and the semiconductor shortage issues. So, great to see us putting out, consistent numbers despite all the headwinds in our way. So I just missed the EPS guidance that you gave for this year. Could you please just repeat that? And then I'll just move on to the other questions I have.
I cannot hear you at all. I cannot hear you at all. You have to say it again. What do you want?
You actually just give me a second. I'll just get this sorted.
I can't hear you at all. Your voice is cracking.
Hello. Yes. What I was saying is, you've given out an EPS guidance, right, earlier in the call. I sort of missed that. So if you could just repeat that once, that'd be, very helpful.
That we are targeting EPS around 30 in this financial year.
A 30 rupee EPS?
Yeah, EPS.
Okay. So that would basically correspond to how many CR of PAT?
You can multiply by 12.34, 1.234.
36 and a half. Okay. So 36, 37 here. But sir, don't you think we can sort of overshoot? We are already at a 40 crore run rate, right? We've done 21 in the first half.
Let's see. I think, of course, it will be better. It should be better.
Look, quarter 3 is still a little bit uncertain with all the semiconductor shortage.
Yeah.
Both globally and domestically. Earlier, the global players were not that badly affected. Now they're slightly affected. So let's see how quarter 3 pans out.
Yeah. Then we'll be more confident of giving you the exact one.
Understood. No, I thought the worst was behind in this quarter and perhaps Q3. But you think there's still more to go on the semiconductor issue?
Quarter 3 looks a little bit tricky, but we'll recover with commercial vehicles, with our spares market, export market. We will.
Understood. Got it. Great to see. And if possible, could you, so I'm not sure if you've done the analysis, but if you could just share the quantum of absolute cost hit that you have to take because of commodity costs going up and, a lag in passing them through. At that as a percentage of EBITDA or that in absolute terms, if there's any number, any figure, that will basically just give me a normalized run rate to look at once, all these one-offs once at least the cost is passed on.
See, I would recommend for that detailed analysis, we will share it with SGA because it's all, there are different kind of expenses. We have captured our price increases from some of our domestic customers, export customers, also freight. So I think for that, we'll have to give it to you on a separate line.
But the gross margin has taken a hit, right? So you think a 1% or...
It will recover.
80% recover.
It will recover. 80% recovery will be there.
Exactly. That's what I feel as well. So you think that could correspond to a 100 bps advantage on EBITDA? 100 to 150 basis points?
I can't comment right now. Let's see how the thing moves, please.
Okay, got it. And sir, if possible, what sort of visibility do you have over the next 6 months from your current order book? 6 to 9 months.
I foresee a little muted quarter 3, but quarter 4 seems to be very good.
quarter four seems to be quite good. Okay, understood. And so what sort of interest are you seeing from OEMs for FY23? And if possible, the final question, if possible, could you just take me through your expected revenue or your targeted revenue for FY23? And yeah, that'll be all. And you know how the order book matches up or compares against that.
But see, I don't know, we don't have the confirmed orders. Nobody gives the confirmed order because they are not sure about the OE customer also. I will be able to give a better picture by the last quarter of this financial year.
Yeah, but 13 to 15%.
15% around we should be aiming, the minimum. We should be working on that.
Okay, about 15% growth.
So does that answer your question? Mr. Singh, does that answer your question? Thank you. The next question is from the line of Faisal Hawa from HG Hawa and Company. Please go ahead.
Yeah. So in my previous question, I had also asked how much are the steel prices are helping us, because I believe the steel prices in India are a little lower than what they are abroad. So is that also a good tailwind for us to really be able to export and it gives us a good advantage? And you feel that capacity utilization just now driving forward, and the ROC and ROE now they're on an uptrend. You feel it could drive it further to say?
Can you repeat your question? Not very clear line. Sorry.
So repeat my question. How do you feel that steel prices have helped us in sustaining these export sales? Because I believe steel prices in India are slightly lower than world averages. And second is, now that ROC and ROE is on an uptrend, you feel it could sustain, and in FY 22-23 it could even reach like 19 to 20%. And what is our capacity utilization at this point of time? And you feel that it could rise further also?
Next 2 years, definitely it can go up by 1 or 2%. Because I think my turnover will be much higher than capex I will be incurring now. So, and regarding the capacity utilization, I told you earlier that my gasket utilization is at present around 82%, my forging utilization is around 78%, my MMT utilization is at 75%, my NLK utilization is at 65%. In Margo Rubber, my anti-vibration division is at 75%, my hose division is at 35% at present. Okay? Hello? Okay.
Mr. Faisal Hawa, you may please go ahead with your further question, sir. Looks like no response from the line again. The next question. Yes, the next question is from the line of Abhishek Jain from Arihant Capital. Please go ahead.
Sir, thank you for taking my question again. Can you throw some light on your capex number for this thing, and what is our current net debt at this point of time, and how we are going to fund the capex going forward?
13 crores in the gasket division and 12 crores in the forging division for the current year. We already incurred approximately 50% of that in this financial year, already incurred, and balance will incur by the end of this financial year.
Okay, and
we'll be able to tell you in the last quarter, please, because things are fluid. But of course, again, there will be capex of minimum 25 crores in the next financial year also.
Okay, sir. And the net debt number, sir, right now?
Net debt number is 101, including long-term, short-term, 101.
Okay, sir. Thank you, sir. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star then 1 on your touchtone telephone. Reminder to the participants, if you have a question, please press star then 1. Well, ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments. Members of the
Thank you so much, everybody, for participating in the call. Thank you.
Thank you.
Thank you very much. Ladies and gentlemen, on behalf of Talbros Automotive Components Limited, we conclude today's conference. Thank you all for joining. You may now disconnect your lines.